You are listening to Small Business Straight Talk with your host, Amber De La Garza. Amber is a sought-after coach, trainer, speaker, and writer who gives small business owners the straight talk on productivity, time management, business systems, leading your teams, strategic decision-making, and mindset. No BS, fluff, or overused jargon. Just actionable strategies to get results and succeed in business. And here is your host, Amber De La Garza, the productivity specialist.
Welcome, and thank you for listening to the Small Business Straight Talk podcast. Today is episode 368, Finance Fundamentals to Master Year-Round Tax Organization. If you're a small business owner who wants to learn effective business strategies, improve time management, and elevate productivity to maximize profits, reduce stress, and make time for what matters most, then you're in the right place, and I'm so glad you've joined me. Did you dread this past tax season because your financial records were scattered across multiple platforms, making it nearly impossible to gather accurate information when you needed it most? Stick around in today's episode, and I'm going to break down 5 fundamentals to master year-round tax organization so you can transform every future tax season from a dreaded nightmare into a manageable part of your business. Before we dive in, I want to invite you to take my Next Level Business Owner quiz. In 3 short, quick minutes, you can find out what's most holding you back from taking your business to the next level, receive a curated playlist of specific episodes that address those challenges, and have strategies you can implement in your business today. What is more productive than taking 3 minutes to find the exact episodes that you can take action on that will make the biggest difference? Head on over to amberdelagarza.com/quiz. And now, let's get to the straight talk. For many business structures, such as partnerships and S-corps, our taxes were due today, March 17th. If you are a C Corp or sole proprietorship, you still have till April 15th, 2025. In either case, this is tax season. Did this tax season leave you feeling stressed and overwhelmed? If you're nodding right now, you are not alone. For many business owners, the tax deadline that just passed or is fast approaching is a perfect storm of stress. Your financial records are likely scattered across multiple platforms. Your bookkeeping software, Excel or Google Sheets, credit card and bank statements, expense apps, email, and maybe even some paper receipts tucked away in various places, making it incredibly challenging to gather accurate information when you need it most. You may have spent weeks or months organizing documents so that your CPA could file your taxes, all while trying to keep your actual business running. And let's be honest, the constant worry about potential audits or missing valuable deductions, it may have even kept you up at night. The good news is that you don't have to go through that same stress next year. Today, I'm sharing 5 finance fundamentals that have helped many of my clients master year-round tax organization. These aren't just theoretical tips. They're battle-tested approaches from working with hundreds of business owners that will save you time, money, and a whole lot of headache. Let's dive into these 5 financial fundamentals that will transform your relationship with taxes and help you stay organized year-round, not just during tax season. Each of these builds on the next, creating a solid financial foundation for your business. Fundamental number 1 is separate your personal and business finances. The absolute foundation that will make every other part of your financial life easier is separating your personal and business finances. Are you still using the same bank account or credit card for both? When you mix personal and business transactions, trying to figure out what's deductible becomes a nightmare. And if you are ever audited, that mixed account is a red flag that can create serious problems. Here's why it matters. It provides an audit trail. Maintaining distinct accounts creates a clear record if the IRS audits your finances, which can mean the difference between a simple review and a stressful investigation. It gives you accurate reporting. You'll immediately see where your business stands financially when you don't have to sift through grocery purchases and Netflix subscriptions. It helps you keep a professional image. Having dedicated business accounts signals credibility to clients, vendors, and lenders. This is essential to scale your business. Now that we know why it matters, let's talk about how to separate your accounts. First, you need to open the right accounts. Business checking accounts. Look for one with small business-friendly features like waived fees, integrated tools, or free bill pay. Get a dedicated business credit card. Use it strictly for business purchases. I like to use a credit card that offers reward points I can use for anything I want, like travel or Amazon purchases. It is important to note that before your business has its own credit, depending on your business structure, you can use a personal credit card, but only use it for business and do not mix it with personal transactions. This is how I started out until my own business was able to qualify for credit cards with great rates and rewards. And one last tip here. Pay everything you can with a credit card and then pay it off at the end of each month to improve your credit history, maximize rewards, and keep all your expenses in one place for easier organization. Next, you'll want to transfer recurring business payments to your business account. Make a list of all business-related subscriptions. Schedule time to identify every subscription you pay for: software licenses, website hosting, email services, membership fees. And I actually have a great episode that walks you through how to do this and save big money. You're going to want to go listen to episode 358, How I Saved $5,000 in 2 hours by doing a subscription audit. So you can kill two birds with one stone. Find all your subscriptions so that you can transfer them to your business account, whether checking or credit card, and you can do an audit in the same time and perhaps save a load of money. We'll link out to that in the show notes. Once you have made that list, you're going to want to update your payment methods by switching these subscriptions to your new business account to create a clean separation. And then you'll notify clients and vendors by updating any automated customer billing or direct deposits with your new business information. So what's most important is you're going to create a list of money in, money out, and notify all pertinent parties of this change so that you can do a clean transition from mixed use, personal and business, to strictly business. I can't stress enough how much time and money this simple step will save you. One of my clients spent an entire weekend sorting through personal and business expenses for the previous year. Time she could have spent with her family or working on high-value projects that moved her business forward. Your future self will thank you for making this change now rather than later. Transitioning from mixed finances might feel intimidating, but by systematically setting up dedicated accounts and updating your payment information, you're creating clarity and professionalism in your business. This foundational step makes every other aspect of bookkeeping more streamlined and significantly less stressful. Let's move on to fundamental number 2. Use a reliable accounting system. Finding the right accounting software for your specific business needs is important, whether it's QuickBooks, which I use, FreshBooks, or Xero. What matters is having the essential features you need: automatic bank feeds, smart categorization, and straightforward invoicing. Let's talk about why it matters. It provides real-time financial clarity. Having up-to-date information on income, expenses, and cash flow allows you to make confident decisions about when to invest in new equipment, hire help, or pull back on spending. It provides time savings and automation. Manual data entry is not only mind-numbing, it's also prone to errors. Good accounting software automates these repetitive tasks so that you can focus on serving your clients and growing your business. I know this firsthand as I waited way too long to switch over from QuickBooks Desktop to QuickBooks Online. I have to admit, I was resistant because I didn't want a monthly fee. However, in the end, it was truly a game changer, and I wish I had done it sooner. Having the right accounting software system helps you prepare for tax season stress-free. With accurate records maintained throughout the year, tax season becomes dramatically less overwhelming. You can quickly generate the reports you need without last-minute scramble. I highly recommend that you, as a business owner, have access and know how to pull your own financial records. If you don't, add that to your list to learn ASAP. We will link out to some relevant episodes that can guide you in the right direction. This is one of those skill sets that I believe you need to have to be empowered about your business and your numbers. Even if you have accurate reports and you're waiting for someone to send them to you monthly or quarterly, I don't think personally, in my opinion, that is good enough. I want you to be able to pull your own financial reports at any time and understand what those financial reports are saying about your business. If that is the goal, then having a reliable accounting system is a non-negotiable. Now that we know why it matters, let's talk about choosing the right accounting system. First, assess your business's needs. Business size and complexity. Are you a solo consultant who might do well with a simpler tool like FreshBooks or Wave? Or do you have multiple team members and need the robust features of QuickBooks or Xero? Consider industry-specific features. Does your service business have unique accounting needs that require specialized add-ons or integrations? Perhaps there's even a software that is industry-specific for your accounting needs. I will say a quick note here is that there are definite pros to using industry-specific software for your accounting needs. I would just caution you with all-in-one solutions where they're your project management system, your financial system, maybe your client communication system, where they're trying to lump everything into one. While that seems obviously more efficient, that's not always the case because of the inefficiencies or lack of features that an all-in-one system may have or may not have in that case. And so really considering, do you need a standalone system for your accounting software, or does it make sense to use an integrated system? That is my word of caution. I have seen time and time again that integrated systems are sometimes far more complicated. I've also seen that it requires more support, meaning you need a special consultant or a specific accountant, CPA, and bookkeeper that are specialized in only that software because it's not as common. Again, I'm not saying what's right or wrong. Just a word of caution to consider both pros and cons of using an all-in-one integrated system that includes accounting software. And then lastly is budget reality. Monthly subscription costs vary widely. Compare pricing tiers and factor in transaction fees and other added costs for features that you like payroll. Some accounting software will allow you to do payroll. For me, I don't even use the payroll solution in QuickBooks. I use Gusto. And again, it's not that the payroll system in QuickBooks is bad. I just like the simplicity and ease of use and it integrates seamlessly into QuickBooks, so I use a separate company for my payroll. You want to make sure that the features align with your needs and your budget when choosing the right accounting system. Next, consider the core features to look for. These are just a few of the basic features that I think are non-negotiable. Bank feed and transaction syncing. Your system should automatically import transactions from your accounts. No manual entry required. Smart expense categorization. Once you label a transaction, the software should remember and apply the same category next time. This will reduce the time needed to categorize because it's learning as you do it. Professional invoicing and payment processing. Look for customizable templates, automatic payment reminders, and online payment options that make it easy for your clients to pay you. And lastly, clear reporting and dashboards. You need comprehensive yet easy to understand financial statements that help you see the big picture at a glance. Also, think about which integrations are important for your business, like we previously spoke about payroll services, an e-commerce platform, expense management tool. What integrations may you need to ensure are able to talk to your accounting software to ensure there is not manual entry and the data is accurate? Choosing the right, reliable accounting system and properly setting it up is truly a game changer. I've watched clients transform their relationship with their finances once they have real-time insights and automated systems handling the tedious parts. By selecting a platform tailored to your specific needs and committing to using it consistently, you'll maintain a clear picture of your finances and free up mental space to focus on what you do best, serving your clients. Now, let's talk about fundamental number 3. Set up a digital receipts and document management process. Are you still dealing with shoeboxes of crumbled receipts or scattered paper documents? Then it's time to bring your receipt and document management into the digital age. Today, tools like QuickBooks Online, Expensify, Wave, Shoebox, and FreshBooks all offer features like mobile receipt scanning, expense tracking, and integration with accounting software, making them suitable for managing business expenses efficiently. Organized, searchable, and audit-ready. Let's discuss why this matters. It increases organization and efficiency. Digital storage keeps everything in one searchable location, eliminating paper clutter and frantic searches. Quick access to records speeds up tasks like expense verification or responding to client billing questions. It makes you audit and compliance ready. Digital storage, well-labeled documents make providing proof of expenses to the IRS straightforward and stress-free. Well, as stress-free as an audit can be, but definitely having your receipts in order will help you in that situation. You're protected against faded receipts or lost paperwork that could cost you valuable deductions. In an audit, you're going to have to prove it with receipts. And, you go to the store and buy something and it's on a regular receipt, those fade over time. So you want to ensure that you have that digitally saved so that when or if you are audited, you have something that you can depend on. And lastly, it archives real-time expense tracking. Capturing receipts the moment you spend means you won't forget transactions later, maintaining accurate records year-round. Because let's be honest, with your day-to-day, are you ever going to actually go back and scan these documents and update all the records? Probably not, because it's never going to feel like the highest priority task to do until the deadline is looming for your tax returns. And so the best practice here is to do it in real time as you have expenses. And now that we know why it matters, let's talk about choosing the right tool. Choose an accounting software with a built-in receipt capture. This is definitely one of the options. As mentioned before, platforms like QuickBooks Online, Xero, or FreshBooks have mobile apps allowing you to snap pictures of the receipts on the go. These systems automatically match receipts to existing transactions, creating a seamless paper trail. Or if you decide to go with a standalone receipt scanning app, tools like Dext, HubDoc, or Shoebox can integrate with your accounting software while providing a more robust document management. And lastly, and this is my own personal preferred method for a couple reasons, make sure you have a cloud storage solution that's right for your business. Even simple tools like Google Drive, Dropbox, or Microsoft One can serve as document storage for your receipts. I'm going to share with you how I actually use this and why. First, now while I use QuickBooks for my accounting and bookkeeping, I didn't want to be tied to the receipt management portion for the duration of the time that I had to maintain records for tax purposes. Because in the future, what if I wanted to not use QuickBooks and I wanted to use another accounting software, or maybe they jacked up the pricing and I wanted to have options? I know that I could close out the books, I can have the financial records and export those as needed to support for tax records, but I am not certain that you can export the receipts in the way that would be needed to have an audit. And so for me, I decided not to use the integrated receipt management because it felt too sticky, meaning they would have me on a chain to stay with them. And I never liked that. So what we have decided to do is we save all of our receipts to our Google Drive. And we have a folder structure that is very clear cut. And I want to be really clear about this. Receipts come into the business mostly in 3 different ways. One is my executive assistant is ordering something, buying something, paid for something online, and she's receiving the digital receipt. So she PDFs it and saves it into a folder. And I'll talk more about the folders in a second. Or number 2, I am buying something or there's a recurring receipt where my email is on the account. And as those receipts come in, I drag and drop them into a saved folder in my email box called receipts. And then third is random receipts because I went to a restaurant or I bought something at Office Max or something at Best Buy that was a business expense. And so I have a physical receipt. And in those cases, I'm taking a picture or I'm scanning it and emailing it off to my assistant so that she can organize it into our file folder structure. The receipts folder that sits in my inbox gets processed monthly at the top of the month, and that is tied to a recurring task inside our ClickUp system for my EA to go in and print all of the receipts into PDF and to save them into our file folder structure. And then every month that folder's cleaned out, and it's so easy for me to see receipts come into my inbox, and I just drag and drop them, and I know that they will be taken care of at the top of the month for the previous month. Now, regarding the file folder structure, we have a receipts folder that is organized by year, and then within each year is the 12 months. And then the documents are saved by the amount for the receipt is first, then just for clarity, dash, and then the name of where we are spending the money at. So it would say like $47.28 dash Amazon. And those are all organized by month so that they could be accessed and reconciled with credit card statements or bank statements. That folder for receipts is in a shared folder where myself and my EA has access to. I then have a separate, secure financial folder on Google Drive where it's locked down and I am the only one that has access. And I think it's worth saying because when we have these Google Drives or Dropboxes or Microsoft One and it's in the cloud, if you're not really clear about the security, you could be saving sensitive financial information to the cloud and anyone on your team could have access to it. So in another financial folder are things like credit card statements, bank statements, my P&Ls, insurance records, business licenses. And those are saved by me. and put into that folder so that I'm the only one that has access to the entire financial picture. I understand that I may not always use Google Drive, and I might choose something different in the future. For example, I used to use Dropbox, and a few years ago, we transitioned from Dropbox to Google. But what I do know is that there is a method to transferring, to exporting, to getting your information. And because I'm confident that if something else came on the market or I decided to go back to Dropbox, I would be able to have access to all those documents. So those are the few reasons. And I've got to be honest here, I haven't looked into every receipt management software. I would just caution you that if you're choosing an independent receipt management or you're going to use something that's integrated with your financial software, check into what is the policy of when you want to leave and no longer use that software. How do you get your information back out to ensure that you're compliant with any audits that may or may not happen into the future? After I just shared with you my process, what I want to do is just pull out a few of the specific actionables or best practices for digital organization when it comes to tax receipts and documents. One, a great practice is to create a folder named receipts. You can easily drag and drop emails into that, and you or someone on your team, like an assistant, can then PDF them and save them to the drive. The next actionable would be to develop a consistent naming convention for all documents. As I shared with you, ours, amount, dash or underscore and vendor's name, and that it's organized by year and then month so that it's easily able to be accessed and organized based on your financials. And then lastly is to make receipt capturing a habit. This is a really big one. I told you there's 3 ways that most, like 99% of all receipts come into our business. And you may have 4 ways or you may have 2 ways, but you have to have a process for each way in which you are handling receipts and have that known of if this, then that. If I go to a store and I have a physical receipt, what's the process? If it comes into my email, what's the process? If it goes into your executive assistants or someone else on your team or someone else on your team is ordering and they get the email, what is their process of getting it into the system in an organized way? Those are my top best practices for ensuring organized digital receipt capturing. A digital document management process isn't just nice to have. It's essential for staying organized and maximizing your legitimate deductions. If you are audited, you will have to prove your deductions. By choosing the right digital tools and making real-time capture a habit, you'll dramatically reduce paperwork chaos and approach tax season with confidence rather than dread. And that is what I really want for you. I want you to approach it with confidence rather than dread. Let's move on to fundamental number 4, track expenses and income in real time. This fundamental is all about breaking the procrastination cycle. Instead of waiting until the end of the month, or even worse, the end of the year, to update your books, commit to regular maintenance. It is important to schedule recurring time needed to consistently maintain your financial records. Regularly reconciling transactions and categorizing expenses keeps your records accurate and your stress level manageable. Let's dive into why it matters to stay current on your income and expenses. It provides clear insights on your cash flow. This is big. Don't you want to know all about your cash flow? Real-time tracking tells you exactly how much money is coming in and going out at any moment. No more guessing. If you can afford that new software or that contractor or that hire, you will understand your cash flow. This clarity helps you avoid cash crunches and make confident decisions based on your financial position. Knowledge is power. And what I find here is most people want to avoid knowing because they think they know, and they usually think they know in the negative, which means they're stressed. And I would rather champion for you to know the numbers so that you can make decisions in your business accordingly to accurate information. This also helps with early error detection. Spotting discrepancies quickly, like unexpected charges, fraud. Did I say fraud? It happens. And businesses are really subjected to this because they know that someone may not be looking at all the charges that are coming in. And unfortunately, I have heard stories of team members and employees stealing from the company because nobody was looking. So spotting discrepancies quickly is going to be really helpful. This is also going to be your opportunity on the income side to spot missed client payments. We have a process internally that all of the payments are set up on an automation and we have notifications. And I don't actually want to know about a missed payment or a credit card that didn't go through until it's been already processed a couple times because things happen. There's expiration issues, there's payment issues, like life happens. I don't want to know about it until it's happened twice, meaning the card's been run a couple times. Then my executive assistant gets involved. She'll reach out to the client. And if it's not resolved, then I am involved. And this isn't going to be months. This is going to be within a week or so. But we have a very specific process to ensure that missed payments don't fall or slip through, to ensure that our projected cash flow stays as accurate as possible. Correcting errors immediately is infinitely easier than trying to reconstruct what happened months later. In fact, if there are random charges on your credit card that you do not recognize, you may actually just blow them off thinking, I forgot what they are, or it's not worth looking into. Versus if you're looking at it in real time and you don't know what they are, it's not because you forgot, but maybe because that charge actually shouldn't be there. You work really hard for your money. It is going to be important that you have the discipline and due diligence to ensure that you're a good steward of that money, meaning you know what's going on. And this is one way to do that. And finally, it achieves your goal of year-round tax readiness, which is what we're talking about today. By keeping books current, you won't face the dreaded year-end scramble to categorize months of mystery transactions. If you do your own books, they may feel like a mystery, but even if you have a bookkeeper and they're sending you transactions to say, hey, I'm not a mind reader, how do we categorize these? Man, it is a dreaded project. Nobody enjoys it. And you're making it far harder on yourself trying to do months and months and months of these transactions and identifying what they are versus in real time. You'll have an instant snapshot of your tax situation, allowing you to make strategic moves before December 31st. If your books are accurate, you will be able to consult with your CPA, your accountant, whatever professional you use, and you're going to be able to determine, is this a year that it makes a tax strategy sense to go make purchases to reduce your income, increase your expenses, and therefore reduce your tax liability? If you do not have accurate taxes, no professional can actually give you that recommendation because there's no numbers, there's no accurate data to tell you what is best for you and your company. And therefore, because you're behind, because it's not current, you may be paying more money in taxes than you need to, and nobody likes that. Now, that we know why tracking in real time matters, let's dive into best practices for real-time financial tracking. First off, link everything possible. Link everything possible to your accounting software. Connect bank accounts, credit cards, payment platforms like PayPal or Stripe, however people are paying you through credit cards or debit cards, to your accounting software. And then set up rules to automatically categorize recurring transactions. And like I said, any good accounting software will allow you to set those rules up, and that it's getting smarter and smarter as you are reconciling and categorizing more and more transactions. This will save you so much time. Next, create a simple weekly routine. Block out 15 minutes, 30 minutes each week. The time needed is going to depend on a few things. One, how many expenses are coming in? How much income is coming in? meaning how many transactions. It's also going to depend on if you have somebody on your team or you're hired a bookkeeper to help you with your bookkeeping. Perhaps it's just a weekly check-in of 15 minutes of what they need, what questions they have for you to get them answered. So block out the appropriate amount of time on a weekly basis, and perhaps that's Friday afternoon, or maybe you want to start Monday morning with administrative, getting your taxes and your dollars in order. In fact, I'm going to say Friday, I'm going to say Monday, but any day of the week that you can show up on a consistent basis is the right answer. Just make sure you block that time out. Don't squeeze that time out. And my last tip for real-time financial tracking is to monitor key metrics. So we're talking about keeping the data current and accurate. If the data is current and accurate, then you're able to actually monitor and make a lot of decisions based on key metrics. Know your must-watch numbers, such as, for example, cash balances, upcoming expenses, outstanding invoices, and profit margins. Create a dashboard view in your accounting software that shows these key metrics at a glance. This will allow you to get in and get out and have that information readily available to you at any time that you find, not just on a regular basis, but also as you're navigating and making business decisions. Tracking finances in real time can be a game changer for busy business owners. By linking accounts, establishing a simple routine, and leveraging automation, you'll eliminate the anxiety that comes from financial uncertainty. When you know exactly where you stand financially at all times, you can make better business decisions and approach tax season with confidence rather than confusion. And lastly, let's close this out with fundamental number 5. Schedule regular bookkeeping check-ins. Making bookkeeping check-ins a non-negotiable part of your schedule. Just as you wouldn't cancel an appointment with a client, don't cancel on your financial review sessions. During these focus sessions, take a slightly deeper dive than in your weekly maintenance. Here's why regular bookkeeping check-ins matter. And I just want to say that you can do these regular bookkeeping check-ins with yourself, as I do. And I've shared this in previous episodes that for the quantity of finances and transactions, my business is really not complicated on the financial side to where it takes a lot of time. In fact, I get all my financials done in 90 minutes a month. So it's about 30 minutes one time a month on the 25th, and then it's an hour on the 10th of the month when I'm closing out the previous month. I'll go into more detail about that in a little bit when I share with you my own process for regularly keeping my bookkeeping in check. But this also may be that you are doing regular bookkeeping check-ins more in depth with your bookkeeper. All right, so let's dive into why it's important and why it matters. Regular check-ins prevent year-end chaos. Regular reviews prevent uncategorized transactions from piling up, eliminating overwhelming tax season backlog. Consistent attention reduces errors that can lead to tax filing complications or inaccurate financial statements. They help you maintain cash flow awareness. We spoke about this earlier. It's almost like a 1-2 punch. What is your minimum maintenance on a weekly basis? And then what is your deep dive check-in on your bookkeeping? Routine reviews can keep you current on your customer payments, overpaid invoices, expenses, etc. You can spot trends in real time, like raising costs in certain categories or seasonal revenue patterns, allowing you to adjust strategies promptly. Your P&L is already a lag metric, meaning it's showing you the numbers, it's showing you the metrics of what has already happened. And so you really want to ensure that you're as in real time with accurate information so that you can pivot as quickly as possible. So let's jump in and talk about how to implement a check-in routine. First, pick the right frequency. Do you need to do this deep dive weekly? I would suggest probably not. Maybe bi-weekly and potentially monthly. And then once you've determined what the right frequency is, I want you to block this sacred time off on your calendar. If you're new to time blocking, this is going to be your first attempt at time blocking time on your schedule for a specific task that you show up for. You can listen to other episodes where we talk about time blocking, but this is essentially all that it is you're blocking off time, holding it sacred for a specific type of work to do or focus in your business. And I want you to treat this like you would any other critical business meeting. Short of an emergency, I do not want you to ever cancel it, but really, even if there's an emergency, it's about rescheduling it. Then I want you to create your detailed checklist of what exactly is going to be done. What is that allocation of time that you're scheduling? What are you going to be doing during that time? Here are some suggestions. Review pending items. These could be pending items because you're doing your own deep dive in your business, or your bookkeeper has sent you a hit list of, here's pending items. We don't know what they're for. We need you to help give us information on it. You can be categorizing expenses, updating invoices and bills. Maybe there's information that only you know. Reconciling all accounts and reviewing financial reports. Now, I do just want to say for clarity, if you have a bookkeeper, they are most likely reconciling your accounts. And in this case, you'll be reviewing all financial reports. Cool, good enough. And if you have a bookkeeper, hopefully they're categorizing all the expenses and you're just highlighting the pending items that are in question. For me, as I have my own checklist, this is what I'm doing. I'm categorizing all expenses. I'm looking at invoices and I'm matching income with open invoices and then determining if there are any open invoices. I am paying bills twice a month. And then once all transactions are updated and categorized, I am reconciling the accounts. And then I move on to reviewing my financial reports as they are accurate because now the data is all accurate. And that deeper dive that I do is on the 10th of the month because now I can close out the previous month's books. When I am doing the 25th of the month and it's about 30 minutes, all I'm doing is, paying team members and myself, categorizing any transactions that came in between the 10th and the 25th. And that is about it. And that's why I can get in and out really quickly. And then the 10th of the month is when everything gets reconciled and all the financial reports get reviewed and detailed. And so that takes a little bit longer. If I have taxes that I need to pay, I'm paying taxes. Of course, I'm paying myself and the team during that time. But that is a checklist that I go off of. And here are some systems to ensure that that checklist is used well. One, set up calendar alerts to be notified during that block of time that you have. If you have team members that are responsible for your calendar, communicate with them and let them know that this time should not be booked over unless previously reviewed by you with extreme exceptions. You can also use a task management system to then hold that checklist. And for us, we use ClickUp, and then it's a recurring task. The task with the checklist is showing up on the 25th of the month, and I also have time blocked out. I call it profit first time on the calendar. Those two things together, calendar, task list with checklist, is what keeps the system in check. And then I have another task that's recurring that's on the 10th of the month that has a little bit different of a checklist, as that time block is an hour and that checklist is obviously a bit longer. I hope that makes sense. I really do keep our financials really simple. If you find that your financials are a little bit more complicated or this is not your wheelhouse, then start with really the foundations that I shared with you today. Hire somebody that you really, really trust. We have had on some incredible professionals that are bookkeepers and CPAs and CFOs here on the podcast. We will link out to those episodes and resources here so that you can get that information. But if you are not happy with your current support that you have, don't keep your head in the sand. This is not something you want to drag your feet on. There's already enough, anxiety, and maybe the numbers aren't your thing. And then you add on that you have somebody on your team that is not showing up. They're not keeping up with your bookkeeping, that they are MIA or any various things that I've seen over the years. That's not good enough. You deserve a high level of support for the money that you're paying to get that support. And finances are essential in the business. So ensure you have the support that you need and that you want. By committing to these regular check-ins, you transform bookkeeping from a dreaded chore into a powerful business ritual. You'll not only avoid year-end scramble, but you'll gain insights that help you make better strategic decisions throughout the year. We have covered 5 finance fundamentals to master year-round tax organization and to transform tax season from a nightmare into just another business task. Number 1 was separate your personal and business finances completely. Number 2 is to implement a reliable accounting system tailored for your needs. Number 3, set up a digital receipts and document management process. Number 4 is to track your expenses and income in real time. And number 5 is to schedule and honor regular bookkeeping check-ins where you do deeper dives into your financials. The best part? You don't need to implement all of this at once. Start with just one. And I'd recommend beginning with separating your finances if you haven't already done that. Set specific time aside to do a financial reset day. In fact, name it on your calendar, block it off, and determine that that is the day that you're going to do your financial reset and separate your business and personal finances from that day forward. If your finances are already separated, then move on to the second or the third or the fourth or the fifth. And if you have all 5 of these, congratulations. Thank you so much for tuning in. You deserve a pat on the back. I would love to hear what you are going to focus on based on today's episode in your business. DM me over on Instagram at Amber_De La Garza. I seriously put my heart into these episodes and pick topics that I think will have the biggest impact on your business and your life. So please let me know. What are you working on? How is it going? What did you learn from today's episode? I'd love to cheer you on and maybe even share some extra tips specific to your situation. Financial organization isn't just about making tax season easier. It's about creating clarity and confidence in your business decisions all year long. I have loved having you listen to the Small Business Straight Talk podcast, and I sure hope you found today's episode to be valuable. But I need to be straight with you. No change, no change. Without taking action, nothing will change for you or your business. So, take action today. Choose one financial fundamental from today's episode and implement it this week. Your future self will thank you when tax season rolls around without the usual stress and chaos. If you are looking for a business coach that can help you navigate topics such as financial organization, digital organization, time management, hiring the help that you need, your team, contractors, business systems, creating efficiency, then we should talk. To learn more about how we can work together and to schedule a discovery call, head on over to amberdelagarza.com. If you are new here, welcome. Thank you so much. Be sure to hit subscribe so you don't miss another episode. Today, I have a special thank you for Shambot, who recently left a review on iTunes and said, "So good. I keep meeting people who have worked with Amber and they rave about how amazing the experience has been. The podcast is incredible. Thanks for all that you do." Thank you so much for leaving a review, and I'm so glad that you tune into the podcast each week. And if you are tuning in each week and you enjoyed today's episode, be sure to share it with a friend who you think would find it valuable. So that's my straight talk for today. Until next time, have a productive week.